Yeah, if you turn up the volume for me, that's good.
Okay, that's almost max.
Yeah, that's great. Okay, very good. Thanks. Thanks very much.
Fire away.
Could you give me a little bit of introduction to the conference to this point and how I can be most helpful? So I'm sorry to just jump in like this.
Well, we've had a couple of speakers. David Kotok led off looking at the situation with central banks globally and what's happened to all the reserve creation. And then Michael Kumoff talked to us about the old Chicago view of banking and how we might want to change the way we do our banking. And then we had Mr. Kotlikoff talking about simple form of banking, and I'm sure you're familiar with his views. So
of course,
those are our three presentations ahead of you.
Very good. Well, I appreciate it, and I've been asked to talk a little bit about the international implications, especially the development implications of the financial crisis and of the banking sector, and maybe it's useful to just share with you a sense that I received a few days ago in meeting with about 100 UN ambassadors who are discussing the global economy and global policy framework for the period from 2015 to 2030, which is very much the United Nations agenda. What was palpable in the room was a very, very deep sense of anger and grievance at the American financial system. And I think that this is important to state because we have our debates as if we're sometimes operating in a cocoon in a way. And the rest of the world, especially the developing world, feels that they have been the victims of the U.S. And its mismanagement over the last few years. And I think that it's a geopolitical reality that is a very real and very justified one. In other words, the sense of the 2008 crisis is you did this to us. And the failures of regulation in the United States have contributed markedly to instability and economic stresses in other places. And as several of the ambassadors reflected, the U.S. and the IMF more or less treat the policy discussions as if nothing really has happened. And what several ambassadors said is, why is it that we're taking advice from the people who have mismanaged the financial system so badly? So I think this is not an insignificant context. It's hard for the key currency and the center of the world financial system maybe to hear this very well and to take it as seriously as it should be taken. But the backdrop from the world's point of view is that the United States has failed badly in financial management, and that the implications of that are felt around the world. My feeling about this is actually similar. And I think that it's worth speaking outside of the monetary and macroeconomic framework for just a moment. And that is to reflect on the Fed's role as a regulator and on the real lessons of the financial crisis since 2008. And the angle that I would emphasize in this, again, I think is not typical for us as economists, but it is the massive illegality that has been exposed in the system. I am tracking systematically the news every day of new settlements of the financial markets to SEC and other legal proceedings. We have really a mountain of criminal and fraudulent behavior that is very much part of the 2008 scene. And we don't usually speak in these terms. We usually speak in terms of bubbles and mistakes, misjudgments, and so forth. But the amount of what I would regard as utter criminality and financial fraud is absolutely enormous. And it's almost daily, whether it's the insider trading scandals or whether it's LIBOR scandal or whether it's the abacus and similar settlements on selling toxic assets by the investment banks. We are, because we're the inside of this, I think we are not actually feeling the full weight of not only regulatory failure and moral failure, but massive legal failure that's implicated in this as well. And today, just as an example, I was, clipped three stories from the news. One was that yesterday a judge approved the settlement with SAC Capital, a $602 million fine for civil insider trading. It's that's a modest fine. The judge expressed his concern that SAC Capital did not have to admit or deny any of the claims that were made in this. So this is a settlement without any resolution of the substantive topic. One asks whether $602 million fine is likely to have much effect. Well, the same day we have the story, of course, that the owner and CEO of SEC Capital took home last year in compensation $1.4 billion personally. So the company is paying a $602 million fine, and at the same time, Stephen A. Cohen takes home in compensation $1.4 billion in personal compensation for his management of the company. And if we just go back a few days, his top trader was arrested in handcuffs and led off from his apartment on Park Avenue. So this is what's called the American financial system at the moment. It's really mind-boggling to me. And it is an unregulated, essentially lawless environment that is not getting any more lawful. So I checked what Stephen A. Cohen, his political engagement this past year, and he gave $217,000 in campaign contributions. Now, this is a pittance from the point of view of his wealth, obviously, as a share of $1.4 billion paycheck. But $217,000 with our cheapskate politicians actually goes a long way to making sure that Mr. Cohen will be very well treated by his senators and by others who are giving ample protection to all of this. So this is where I would start, actually. I think the macroeconomics is important, but I think that the lawlessness and the sense of the world in the complete impunity of the system is absolutely massive. And wherever you look, we see the same thing continuing till today, and that is massive, massive bonuses at the top of the financial markets, massive civil fines being paid for really incredible behavior, and massive campaign contributions going from this financial leadership to the political class. Yesterday's front page story of the New York Times gave 8 salaried figures. David Tepper, $2.2 billion paycheck. Ray Dalio, $1.7 billion. Stephen Cohen, $1.4 billion. By the way, half of these companies didn't even beat the market last year. It doesn't matter. They have a fee structure that is independent of any real performance, and when they fail, of course, they don't have to give back anything in this till today, including last year's billion-dollar compensation holder, John Paulson, whose gold price bet is announced today to have lost $1.5 billion for his shareholders. But I can guarantee you he's not putting $1 billion back into his company. It's only upside, no downside. And when you look at the political linkages of all of this, Daniel Loeb, who gets only $380 million of compensation, gave last year $551,000 in campaign contributions. Ken Griffin, who took $900 million for Citadel, gave $2.7 million of campaign contributions. David Tepper of Appaloosa gave $601,000 of campaign contributions, and so forth. And many of these companies are involved in these civil lawsuits, payments for fraudulent behavior that is neither admitted nor denied. The final thing I would add on all of this that shocks the world is that we have perfected not only this system, but we've perfected the system in which these companies are domiciled in the Cayman Islands, or they're domiciled with partners in the Cayman Islands, taking away any accountability and further not only masking them from tax liabilities on these earnings, but also masking them from many legal liabilities. The latest, of course, as you know, is that they've created reinsurance companies in Bermuda and in the Cayman Islands that allow them to invest in their own firms through a tax-sheltered mechanism that is only a shell from the point of view of insurance. So my question to you, you're part of the Fed. Where is the Fed? Because this is about basic regulatory practice. It seems to me, in truth, that we have a system that is out of control right now, that's politically out of control, regulatorily out of control, out of legal bounds, out of responsibility, and we've invented a system where you get to take home billions of dollars in personal compensation. Your shareholders pay hundreds of millions of dollars in fines. You shelter your money in the Cayman Islands in agreement with the IRS, and nobody seems to control it at all. And you know, I sit with the diplomats here in New York. I can only tell you that the level of unhappiness has risen to really very, very stark proportion. And I can only agree with them that I don't see any real progress being made in getting this right. So this is my brief message. I think we're beyond the macroeconomics right now. We're beyond the prudential issues. We're to a very gut level of legal accountability, fairness, tax regulation, transparency, and a basic sense of fairness. And my view is we don't have it right now. Wall Street is pretty lawless, and unfortunately, the regulatory system that we have is nearly broken down. That's my take from this end.
Professor Sachs, thank you very much. We'll turn up the lights back here. There are about 80 people here at this conference at the Federal Reserve. I should have introduced myself, Bill Dunkelberg. I was chair of the organization for a long time, stepped down in January, so we have a new chairman. But if you have a few minutes, we would like to open our floor
Absolutely.
for questions to you, and hopefully you'll be able to see us. So I'll look
I can now. Yep.
Okay, and the lights will go up. That'll help, I guess, once we figure out how to do that. So questions for Professor Sachs?
Yeah, I'd like to hear views about why I've got this wrong, actually.
Thank you very much, especially for what appears to be moral outrage. Some of us are more on the limited government Tea Party side and see this as a failure of government. And just to bring it down to a very gut level, if you say, we have a trial in Philadelphia. It's an abortion clinic trial. But the scandal is, for 17 years, this clinic was not investigated or regulated. The law requires a medical facility. It's much the same as what you're talking about. That these are supposed to be regulated. You have SEC, FDIC, et cetera, There's a failure of government from your level, from what you're talking about, all the way down to a medical facility. And there was alerts that the people could have stepped into. And I'm wondering whether you see a failure of government, because now you're telling me that the international community is looking at our country and mainly a failure of government in a very negative way. And this is, I'm an American, this is very upsetting.
Yeah, I think this is a profound failure of government without question. It is, I think from the Tea Party to, if I could say, the left, which I probably would be classified in, I think we would agree that the symptoms are government failure, massive corruption, massive legalized corruption of large money interests that have taken over the regulatory process, regulatory capture. Probably the diagnosis would be pretty similar on many different points of the spectrum. I think what's interesting for me, and so let me describe two questions on kind of the response to this, because one response is that we ought to make government work, and the other response is we can't make government work. We ought to basically close down another part of government and understand that it can't work. And these are both logically consistent positions, in my view. One thing to add to the evidence base is that when the financial crisis hit on September 14, 2008, the Wall Street Journal, which is normally our voice of libertarian free markets, ran an editorial a few days later saying, "Are you crazy? Don't you understand market failure? Of course we have to bail out the banks. The whole world economy will fail if we don't go in and bail them out," and so forth. You could call that a loss of nerve, you could call that hypocrisy, or you could call that a diagnosis, whichever one you want. But the point is, very soon after the financial crisis hit, the call even from the free market right for bailouts was there. And another complete example of that is Paul Ryan, who purports to be a voice of libertarian thinking, but he voted for TARP at the same time, and said, of course we have to bail out these institutions, otherwise the markets will collapse. So that, of course, only deepens the puzzle. It doesn't solve the basic conundrum of whether this is irremediably broken or whether this is hypocrisy that needs to be solved. What the hypocritical part, I find, is that the moment that the bailout happened, the Wall Street Journal immediately reverted to form in its language and its claims after this very big bailout had occurred. Then it went back to its free market stance as if nothing had happened. I think that there are at least two parts of a good answer to this. One is to create a situation, maybe along limited purpose banking, maybe along institutions that are not too big to fail, so that you really can let these institutions go under to an important extent, and get away from this compulsion of of not only bailouts but the hypocrisy that comes along with it. I think that that is certainly part of the answer. I do think that there is a truth, though, to the fact that a fractional banking system, if we're going to keep it, and we probably are, as Milton Friedman rightly said, it is inherently a fragile institution that is subject to self-fulfilling collapse. As he said, the one stone can start the avalanche, and it's the job of the Fed to prevent that from happening. And this means that bailouts, in some sense, in some ways, some lender of last resort fulfillment is going to be inevitable, and in that context, regulation is also going to be inevitable. I don't think we're going to really get around the need for some regulatory performance, and we need to analyze why it is that it has been so completely, such a complete failure. Part of it is technical, no doubt, that markets can deregulate around regulation, but part of it is really political corruption that probably could be addressed in a more straightforward way. I'll personally say, on a word of moral outrage, I don't believe that there is any theory in the world that justifies the incomes that these people are taking. This is, in my view, a prima facie market and political failure. I know a lot of these people. There's no way in the world that their marginal productivity is orders of magnitude close to their income levels. And I find it completely disgusting that they are allowed to make large political contributions. You know, we have the Hatch Act, we have other limits on political contributions, and I think that the Fed should be a lot more serious in pointing out these contradictions and trying to create space for itself to be a decent regulator again.
All right, we have next one of our speakers.
Hey, Jeff, it's Larry. How are you?
Hey, Larry, how are you? I don't see you, but I hear you.
Well, to me...
There you are.
Yeah, to me, I think the banking system is getting a big pass from the judicial system and the politicians because they have this control over this public good, which is the financial exchange system, and also public confidence, business confidence. If these big companies are seen to be engaging in fraud, then suspicion will land on all the other companies like them because nobody can tell what they're actually up to. There's no disclosure. So to me, this thing only ends when we get these entities out of the leverage and opacity game and move to a radically, new and safe system where they can't fail and they can't leverage, and they have to disclose what they're actually buying on behalf of their clients.
I think, your point, Larry, is a very powerful one. And at a not a literal level of single-purpose banking, but of a more general level, GlassSteagall successfully did that for quite a long time, and its removal was a very, very cynical play by Rubin, Summers, Clinton, Graham, and others who all had very strong interests, personal interests in the outcomes of that deregulation, and exploited the gaps that they created, and then, to the chagrin of some of us at least, were invited right back into the White House in early 2009 after they had made this calamitous mess to be the ones supposedly to fix it. And I know that Summers, for example, continued to really institute moral hazard policies right and left by fighting against any limits on compensation of these people who had entered into the breach. So this is a case where institutional reform of separating fractional reserve banking and basically the provision of liquidity from gambling should be done. But I would add this other point, which is that a lot of what's happened actually and what's been revealed is, in my view, prima facie criminal behavior. It's financial fraud on a very large extent. There's also a tremendous amount of insider trading, and you can even watch it when you're living in New York, how that works. So it's not so mysterious. But we don't even act. I take John Paulson, for example. Paulson worked together with Goldman Sachs to defraud massively many European banks which bought the toxic mortgages that Paulson had put together. When this abacus deal was taken up by the SEC, Goldman ended up paying a small fine. The chair of Goldman, of course, continued in his position and continued at White House state dinners. And Paulson wasn't even mentioned once in any of the proceedings. He took home a $1 billion paycheck the next year, even as Goldman was paying a roughly $700 million fine, if I remember correctly, for the abuse that Paulson was part of. I can't believe, no matter what the financial regulations, we can't do better than that. That's really pathetic.
As a former congressional staff attorney, retired tax lawyer, looking at the possibilities of small steps that might be taken, how affirmative would you think reenactment of Glass-Steagall would be?
I think that it is quite important to recreate a mechanism where liquidity is separated from large-scale financial gambling. It's really, in my opinion, as a macroeconomist, it's the collapse of liquidity that is the real macro danger. The rest is the collapse of confidence, lawlessness, decency, and so on. But what made Lehman so damaging, of course, was how it infected the money markets, the interbank loans, and the complete drying up of commercial paper. This was the devastating effect. It was basically March 1933 replayed. So liquidity is what is the real value here from a macroeconomic point of view. Loss of wealth, I could care less whether they make more or less money. I don't even care whether they make big money particularly, except I think a lot of them are crooks, and that it's based on a lot of nefarious behavior. But the macroeconomic significance is a kind of Diamond-Dybvig banking crisis, which we know to be part of a fractional reserve banking system. And it seems to me, analytically, we have basically two levels of decision making. One is separating liquidity in the banking sector from other kinds of speculative financial activity. This I would do for sure. And I would never have put Goldman Sachs back under the Fed's protection as a banking unit so that it could receive direct loans from the Fed. That's ridiculous, and sad, actually. But the second point then is Larry's point, and this is whether fractional reserve banking itself has value enough to keep it in its current form. I'm not convinced, I have to say, one way or another. I'm kind of, grew up in a fractional reserve banking system. I do believe that it provides liquidity in normal times if regulation is good. I tend to believe that there is value in reserve banking, but it's also highly volatile, as theorists have recognized at least for 150 years. And as Milton Friedman agreed, as Diamond said, as Larry has pointed out, and I think we have the choice, could we really have liquidity without fractional reserve banking? If we could, we might be able to address, another degree of this problem. The final point, of course, is separating the politicians from the crooks. But maybe that's so close together that they can't actually be separated. Maybe it's just the same community.
Yeah, hi, this is Michael Kumhoff. I'm one of the presenters this morning. I presented the paper about the Chicago plan. And I had a different question, but I just wanted to say it is possible to separate liquidity provision from credit provision, and that's what the Chicago plan is all about, and I think that should definitely be tried. But my question was, your international experience, you were starting off by saying you're talking to a lot of international decision makers. What is the sense there about the readiness to try different monetary and financial approaches to what we have today? Do they feel that they could start to do that on their own in their own countries, or do they feel that they depend on the center countries like the United States and the Europeans to do something first?
I think in general for most small countries or most developing countries, I'll put aside the very largest ones, there is a sense of almost complete dependency on the international system, their payments, their lines of credit, interbank markets, the need for swap facilities with the Fed or the ECB, the pervasiveness of tax havens, the extent of flight capital from their countries, the legal structures that where basically very clever U.S. lawyers help to free all of these countries from their tax revenues. They feel very much dependent on a system that they feel is dysfunctional, but they've been well-schooled that for the last 25 years their goal is to be part of the international system. They just woke up to a system that they find very destabilizing, and they don't see any clarity of the way forward. And most of the advice that they get is to be part of the system and be quiet, basically. This is how the system is. You join it. You stay in good terms with the Fed, with the IMF, with others, and there is very little sense of autonomous potential among these countries. Really, I can only emphasize the palpable anger and vulnerability that's felt right now is very, very high.
My name is Dennis Peacock, and I represent the faith-based side of macroeconomics. And I just want to congratulate you that you pulled us back to the reality that in spite of all the complexities and theories and mechanics that we deal with in economics, that economics is really about values and the values and ethics of people. Thank you very much.
Well, thank you very much for saying it and practicing it. I do believe, by the way, I'm just going to end here because I've been pulled. I have to run to the UN, in fact, right now. I believe we have a crisis of values that is extremely deep because the regulations and the legal structures need reform, but I meet a lot of these people on Wall Street on a regular basis right now. I'm going to put it very bluntly. I regard the moral environment as pathological. And I'm talking about the human interactions that I have. I've not seen anything like this, not felt it so palpably. These people are out to make billions of dollars, and nothing should stop them from that. They have no responsibility to pay taxes. They have no responsibility to their clients. They have no responsibility to people, counterparties in transactions. They are tough, greedy, aggressive, and feel absolutely out of control in a quite literal sense. And they have gamed the system to a remarkable extent, and they have a docile president, a docile White House, and a docile regulatory system that absolutely can't find its voice. It's terrified of these companies. If you look at the campaign contributions, which I happened to do yesterday for another purpose, the financial markets are the #1 campaign contributors in the U.S. system now. We have a corrupt politics to the core, I'm afraid to say. No party is, I mean, there's not, both parties are up to their necks in this. This has nothing to do with Democrats or Republicans. It really doesn't have anything to do with right wing or left wing, by the way. The corruption is, as far as I can see, everywhere. But what it's led to is this sense of impunity that is really stunning, and you feel it on the individual level right now. And it's very, very unhealthy. I have waited for 4 years, 5 years now, to see one figure on Wall Street speak in a moral language. And I've not seen it once. And that is shocking to me. And if they won't, I've waited for a judge, for our president, for somebody, and it hasn't happened. And by the way, it's not going to happen anytime soon, it seems.
Professor Sachs, thank you so much for this presentation.
Great.
Global
Thanks.
Independence Center is very grateful, and good luck to you on your next talk, which I hope